it's my real honor to introduce Tushar. Tushar's the co-founder and managing partner at Multicoin Capital. It's a thesis-driven investment firm that has been really pivotal in helping fund and guide projects across really the entire gamut of the cryptocurrency space. And actually earlier this month, they announced their Venture Fund 3, which is a $430 million fund poised to be invested in crucial areas of Web3 and the crypto economy. So that includes things like data DAOs, Web3 infrastructure, and proof of physical work. So Tushar and his co-founder, Kyle, launched the fund back in, I think, 2017. And as a member of the 2017 crypto cohort myself, it's been really exciting actually to see kind of the massive influence that Tushar and the rest of the Multicoin Capital team has had on like the nascent ecosystem. And they've been with it as it's really kind of gone exponential. And so yeah, without further ado, it's really my great pleasure to invite Tushar up to give his talk discussing what, in my opinion, is like one of the most fundamentally crucial components of any token or any kind of cryptocurrency project, but particularly that in the DeSci space. So he'll be talking about token design.
Thank you, Jeff. I appreciate that introduction. And thanks for having me, everyone. I'm excited to be here today. Really excited about what's happening in DeSci broadly. Excited to learn more about it and invest in the sector as well. I think one of the most important things to talk about, though, is, how do we organize these DeSci communities? And to me, tokens are a form of community management and community organization. Really, tokens are an incentivization mechanism, which allows for self-organizing communities around the rules of the token and the protocol and what is incentivized. And this can be enormously powerful. One example of this outside of DeSci that I think is very relevant is just how tokens can lead to a novel way to have capital formation is when you look at things like the Helium network or HiveMapper, both of which are portfolio companies of ours, where basically you reward people with tokens for doing something that creates a capital asset. So in the case of Helium, you reward people with tokens for putting up wireless routers and providing wireless connectivity. And this creates a capital asset in the form of a global telecommunications network. In the case of HiveMapper, you can incentivize people with tokens to collect always up-to-date mapping data, and this creates a capital asset in the form of an always up-to-date map. With DeSci, what I'm very excited about is the ability to use tokens to incentivize new ways of coordinating in science. For example, being able to reward replication studies, being able to reward peer reviewers, and other parts of the ecosystem that currently are pivotal but don't get rewarded, and building in those incentives in a fair, transparent manner that the entire ecosystem can participate in. I think it's also very important to note that tokens enable permissionless innovation. It means you don't need to go work at some fancy university or have some fancy degree in order to contribute. This is more like the open source software movement, which is anyone can contribute. And I think that that leads to more access, more inclusion of people who may not have the pedigree or the credentials, but may have the ability to contribute to science. And science history is littered with examples of people who came out of nowhere to become some of the most important contributors ever. So let's get into some details here, right? You can use tokens to incentivize specific behaviors, but you have to be very careful how you do this because it's permissionless. Anyone can sign up and start contributing. And if your contribution mechanism is vulnerable to something like a Sybil attack, where someone spins up 10,000 identities or 1 million identities and tries to participate in the protocol and that is rewarded, that is going to happen. So you need to be very, very careful about how you incentivize these behaviors, how you verify that the behaviors were actually done, and how you reward people. One of the mechanisms that I really like for rewards are to have rewards have a lockup on them, where rewards are not immediately redeemable. I think this dissuades a lot of the hot money kind of people from showing up to the system, because even if they show up, they have to wait, 6 months or a year or whatever your lockup is before they're going to make money. This gets to a bigger point here. This is especially true for DeSci, but it's true for other projects as well. You have to be really careful here because you don't want the tail to wag the dog, right? You're creating the tokens in order to further the goals of your project. The biggest failure mode that I see for projects is when they let the tokens and the capital markets take over their original mission. And then their mission changes from what they initially set out to do to satisfying crypto capital markets, or basically looking for number to go up. And that's a very, very dangerous game because it can be very alluring. All of these projects, it's like going public at like a Series A stage for a startup, right? So you're not necessarily ready as a founder to do that. Most people have not, been public CEOs before. And the pressure that you have on you from investors and from, people out in the community who own the tokens can be incredible. But you have to resist that pressure. You need to engage crypto capital markets, but you cannot let them become the driving force. Examples of this include things like, if you guys have looked at what's happened in the DeFi sector with liquidity mining. So DeFi protocols or decentralized finance protocols tried to incentivize a lot of activity on their protocols by rewarding people with tokens for trading or for lending or for borrowing on those protocols. And what ended up happening is that people just circularly traded with each other or lent and borrowed from themselves in order to create the appearance of massive amounts of activity that were being done by only a handful of people. And the thing is, those people were all acting rationally because the cost to them to do the action was less than the reward that they were getting for doing that action. This also was massively distortive on the actual project leads who looked at their KPIs, going up and to the right and thought that they were doing a great job. They thought everything was working really well because, they're seeing their total value locked or trading volume or, whatever other KPI they care about go up. And this is one of the most dangerous things in token design is when you let the crypto capital markets price stuff drive activity, and then you think that you are succeeding, even though it's actually just a capital markets game. It's one of the first things we look for as investors as well. In more mature projects, this is obviously not relevant for seed stage projects, but this is something that we very explicitly look for. What percentage of activity is organic? And lockups are a very good way to do that. You have to be careful who you reward as well, right? Most of these systems have multiple different types of stakeholders. And not all stakeholders need to be rewarded in the same way. Frequently, what we see are protocols not rewarding stakeholders that need to show up in the case of an emergency. I'll use another DeFi example here, but this is applicable to DeSci protocols as well. In DeFi, when you have a levered position, you have some asset, you've borrowed money against it, Sometimes, you can get a margin call where you need to go post more collateral or you need to pay down your loan. This, if you miss it, means that you get liquidated, right? Your assets are going to get liquidated and someone has to do that on chain. One major failure mode that we've seen is we saw these protocols incentivizing people to borrow, people to lend, people to trade, but they didn't have incentives or strong enough incentives for liquidators in the system. And then if no one shows up to liquidate, that can mean the whole system turns insolvent. So in the case of science, I think that main component right now is replication studies. I think we have a replication crisis in that we are not seeing enough replication studies, and the whole system falls apart without it. Because without the independent verification of what is published, we don't know if it is true. We need to be able to independently verify the methodology, and we need to reward people who do these types of replication studies and who do this type of kind of immune system work for the scientific community. So that's one of the things I'm most excited about in DeSci. That's one of the lowest hanging fruits that I see, is rewarding replication studies and rewarding people for verifying what others have published. Next, I want to talk about financialization. I've talked with, at this point, something like half a dozen to a dozen DeSci entrepreneurs. And one of the concerns that I hear is, I want to launch a token, but I'm worried about overly financializing the community and the interactions within that community. How should I think about this? And I think that's a great question. It is a very valid concern. You do not want to over financialize your protocol. This goes back to the earlier point about letting capital markets drive your KPIs and drive your actions. You need to keep the core mission front and center, but you cannot ignore the capital markets here either. They are critical. That is what is making everything possible. That is where the funding is coming from in order to incentivize everybody. And that is where the coordination mechanism really sits, is in that token that you're using to incentivize people, right? So you have to walk a fine line between overly financializing. These are not strictly capitalistic enterprises, in my opinion. They have a specific goal other than just make as much money as possible, hopefully. But at the same time, you need to make sure that you design the token in a way that it captures value, that investors understand how it will capture value. They will then be willing to fund the research that will then create this value and reward your community contributors. And the communications around this are absolutely critical, because one of the biggest mistakes that I see is people assuming that the investors or the investor community will go through and understand all of the subtle mechanics and nuances in your protocol. Most investors are quite lazy. They're not going to do that. You need to serve it up to them on a silver platter with a one-pager written for a 5-year-old in order to explain, why this is exciting and why they should be willing to invest some of their hard-earned capital with your project and help fund the research that you're contributing to. So that's a very fine line. Most entrepreneurs have not done this before. So I cannot stress enough the importance of working with good advisors, talking to entrepreneurs who have been through it, working with VC firms, working with other market participants who can help educate you on this type of interaction. I think communications is more important in crypto than it is in other markets, because everything is public, everything is inherently global, and everything is down out in the open. So that means that people can interpret things however they want, and you need to prioritize having a clear, consistent message that comes through the noise. This is especially important for capital markets because most investors will not go through to the level of detail needed to draw their own conclusions. You have to serve it up to them. I have a few more things here, and then I wanted to open it up for questions as well. One of the main things I wanted to talk about is on token design, some do's and don'ts that I have. One don't that I have that I think is critical is don't denominate costs in your protocol in tokens. That is very problematic because the token price will be volatile. And if it costs me, 10 tokens to do something, and that token is going to swing 50% in price, every week or something, crypto can be quite volatile. That can change the cost to your end user to use your product. And that is a problem. You don't want to say, oh, well, everyone needs to stake 10 tokens. And when I staked, they were worth $1 each. But when Jeffrey has to stake, they're worth $100 each. Well, that's pretty exclusionary. And it doesn't lead to the best outcomes. I strongly suggest always denominating costs in USD or other fiat currency terms in order to make sure that you don't exclude later contributors. One of the easiest things to fall prey to in designing a crypto protocol is overly rewarding the early contributors by giving them way too much of the token supply and way too high rewards. And then this reduces your flexibility in the future to continue to grow the community. You have to be very disciplined about this because the token supply is a zero-sum game. Yes, you can inflate it later, but capital markets will want to see strong guarantees and understandings around total token supply in order to be willing to buy the token, basically. And so you have to be really careful about not spending half of your tokens in year one or something like that, because then what ends up happening is those early contributors almost become rent extractors off of the protocol and off the network, because they are going to get a percentage of everything that happens later. This can be very dangerous. I think the best way to build a community in crypto is not to go and have a handful of people make a bunch of money. It's to make a lot of people a small amount of money, such that they're all contributing and excited, but you want to spread the tokens. I believe that every time the crypto industry has found a new way to distribute tokens to value add network participants, that has kicked off a new bull market and kicked off tremendous amounts, billions, tens of billions of dollars in new investment. Examples of this include the proliferation of proof of work mining coins in 2013, to ICOs in 2017, liquidity mining in 2020, NFTs in 2021. Now we're seeing emergence of things like proof of physical work and data DAOs, which Jeff mentioned, which I've published about extensively on our blog, Multicoin.capital. But I think DeSci is another one of those that we're very excited about, because if we can reward the scientists and the researchers who are creating the science, I think we can incentivize more of it. And I think that investors will be very excited by the ability to coordinate directly with these people who they previously had to go through institutions in order to be able to contribute to. Right now, for example, for me, I'm a big physics nerd. I would love to be able to contribute to physics research. I don't really have a way to do that easily. I have to go contribute to some organization. There's no easy way for me to contribute to some particular researcher. There's no open funding marketplace for something like that. All right, so I'll wrap this up with just one final point here. I think that science is incredibly important. It's a culmination of all human knowledge here that we're trying to advance. And I think that, honestly, the current system has many major flaws, specifically the stranglehold that journals have on how prestige is perceived within the industry, how some of the incentives drive certain actions like no replication studies, incentivize not publishing when you don't have an exciting result, even though that could be useful information for the future. The only way to contribute to someone else's citations is to go and write your own paper. You can't stake to their paper to say that it's going to be important. You have to go write your own, which is incredibly difficult. And so what I see here is a tremendous amount of opportunity, because at the end of the day, tokens are just an incentivization mechanism. The idea is to use this system, whatever systems that you all are designing, to enable more efficient coordination between these parties all around the world. And if we are able to increase the efficiency of research by 50%, 100%, 200%, which I think are very much on the table, that can really, really change the world. So I'm very excited about the DeSci movement, and excited to be a resource for anyone here, either today with questions, or please feel free to reach out to me independently. My Twitter DMs are open. Very excited to chat and help.
Awesome. Thank you so much, Tushar. And just for everybody, there's a Q&A button. So feel free to ask your questions in the Q&A, and we'll filter through those and read them out. I had a quick one to kickstart all of this off. So you talk about kind of value capture for the token, and this is obviously very important, and different crypto protocols have gone different ways about kind of bringing that value to their token, and some haven't. So you take the Uni token, for example, they haven't done a very good job at capturing any value from the protocol into that token. And so I'm wondering, what are some kind of common mechanisms that you think people in the DeSci movement, or just broadly, can use to, in a kind of legal way, bring kind of value to the token that they're using?
It's a great question. I think token value capture is critically important, and Uniswap is not able to capture value. That's why they haven't turned on fee capture to Uni token holders. I think that's actually probably negative in the long term. But markets can stay irrational in the short term, for quite some time. So don't look at market prices as an indicator of rational thinking always. I think there are really two major mechanisms that are used for token value capture today. One is you stake the token in order to earn some fees. It is important that those fees not be denominated in the token that you are staking. So this is not stake SOL in order to earn more SOL. This is more like stake GRT in order to earn the query fees in dollar-denominated terms. This means that the token has some cash flow, and therefore you can use a discounted cash flow valuation in order to think about how much it's worth. I actually think this is a very skeuomorphic token design, because it looks very much like the old world, where you own a capital asset and you have a stream of income due to owning that capital asset. The pros of this design is that it's very easy for capital markets to understand. The cons are that it introduces a barrier to entry for people to participate in the network, because they have to go acquire some tokens and stake them in order to do something and add value to the network. The model that I like more is called, or at least I call it, the crypto commodity model. We've also published about this one and referred to it as the burn and mint equilibrium model. And the core concepts behind it are, you have token emissions that go to reward certain network participants according to predefined rules. And when someone wants to consume a service provided by your protocol, they must burn a USD denominated amount of tokens. This leads to an equilibrium price, where if I'm issuing 5 million tokens a month, and the token price is $1 right now, that's $5 million of tokens being issued a month. And if there's only market demand to buy $2 million of tokens to consume whatever service my protocol provides, well, now the network is inflating. There are more tokens being issued than burned. And that will cause the price to come down from $1 to, in this case, to 40 cents, where 5 million tokens times 40 cents equals $2 million, which was your dollar denominated demand. And that price will find an equilibrium. The same thing works in reverse, where if you're doing a good job and demand is going up, your protocol is providing a very useful service, you increase the amount of burn. Now it's $10 million being burned, but only 5 million tokens at $1 each being issued. Well, that means that 5 million extra tokens are going to be burned that month. That's deflationary, will push up the price, in this case to a $2 token price, which is where that equilibrium will be between the burning and the minting. I like this model because it does not introduce a barrier to entry for new network participants. I can show up and start doing stuff on your platform without having to contribute capital. So this is much more inclusionary and enables much wider participation.
Yeah, absolutely. It kind of, the buyback burn kind of method, or just the burn method, kind of abstracts away some of like the crypto-esque kind of components of staking and things like that. And so I think especially with a lot of the scientific community who's like less privy to some of the Web3 cryptocurrency side of things, which is what we've kind of been observing, is most of the community isn't so familiar with that. I think abstracting away those concepts are probably kind of the best route. Yeah, is anybody else have any questions? Any questions in the Q&A?
Yeah, I have a question for you, Tushar. So first of all, thank you so much for the talk. That was really amazing, and I really love that you touched upon the reproducibility crisis. That was basically how I got into DeSci, because I was having those problems in the lab. Something that I wanted to ask you is, do you see any specific challenge specific to the DeSci movement? We were talking about communities winning the community. As the community of scientists, do you see any particular challenge in explaining, token design and so on, and how the platform uses the token to kind of like incentivize the right mechanism, as opposed to, for example, other kind of communities? So anything that is specific to DeSci.
The participants are different, right? Obviously, we're going to have more academics and researchers involved in DeSci protocols, and I think the culture is quite different than the rest of crypto, right? A lot of crypto is, just like a lot of crypto community is honestly there to make money, right? To be very candid. And you have to be careful to segment, who you listen to in your community. I think that's going to be one of the challenges that DeSci projects have, is as DeSci becomes more mainstream, which I expect will happen. We'll see, a DeSci token in the top 50, I hope, within the next 2 years, which I'm quite excited about. That is going to bring in crypto capital markets participants, and you want to take the good and leave the bad, right? You want to take the pros of having all these people who care. You want to educate them. You want to communicate, why this is important. But at the same time, you cannot let them drive the bus. This is also why I'm not the biggest fan of, truly decentralized governance, especially in the early stages of a project. It can seriously derail momentum. I believe that direct democracy is not a good way to make these decisions. If you must have decentralized governance, have something that's more of a Republican form of government where delegates are being elected. And those delegates are being imbued with the authority to make decisions for the protocol to move quickly. One of the best ways to kill a project is to have everything go through committees and have everything go through some long process to go, have the entire community come along. And I know that that can be like a natural urge to do it, but it just harms velocity so much. And I think it's a major negative.
I also think it could be kind of like overwhelming for the community as well if you kind of like involve them in every decision. So there should be some kind of like decision on how to go forward with some proposal and then open that to the community. Again, like for example, with token voting, I think it's something that's really useful in this sense to kind of like align the community around the common goal, kind of like a common vision, let's say.
Absolutely.
Okay, so I don't see any other question, so I think we might want to close it here and give the word to the next speaker. So Jeff, any closing thought you have?
No, I just want to thank Tushar greatly for kind of his insight on token design. Again, when DeSci projects are incorporating tokens, it's clearly a central point of their protocol. And so a lot of things are hinged on the token a lot of the times. And so token design is immensely important because everything else kind of gets built on that, or the token is leveraged pivotally to do things. So I think it's very important, and it sets up the protocol for long-term success. So thank you again, Tushar. It was a real pleasure.
Thank you for having me. And if anyone has any questions following up later, please feel free to reach out to me directly. Like I said, really excited about the sector and looking to learn more and invest into this space. So thank you, everyone.
Thank you very much, Tushar.
Bye.
Goodbye.